Hi folks, long time no see. Welcome to this video, and in this video we're talking about the break of structure, right? It's actually a misunderstood concept, especially in the smart money retail space, and it's something we really need to put better clarification upon, all right? So in this video we're talking about how to use break of structure and how to use it effectively, all right? Now, some people have been asking a question, what kind of BOS should I be using? Should I be using the wick or the body? And I'll be addressing that as we continue. Should it be the wick or the body, right? It has been an issue of concern for so many traders, right? Should I be using the wick of the candle or the body of the candle, right? Because some mentors tell you that, okay, look at this now. Some people will be like, okay, this is a break of structure. Why? Because the market did was it's closed above the body of this area, right? So people will call this a BOS because why? The market closed above that region, right? You can say the market closed above. So people call this a break cost. Why some people would prefer that it's actually a week. People will be like, okay, it's actually a week. It's not the body is if the market can just wick above the last low or high, then you can consider that as what your break of structure, right? So in this video, we'll be putting perspective to that issue, right? Should it be the weak or should it be the body? And how effectively should we use the break structure, right? But before we dive down into the issue of the weeks of bodies, I want to tell you this. Now, before you do anything, you have to identify what makes a break of structure significant, right? So there are three things that makes a break of structure significant, right? Because the market can be bullish, right? The market can be bullish. Let's say market can be bearish, and let's say market do something like this. Market give a kind of run, right? So you think that okay, that this is a break of structure, right? Some people be like, okay, this is now a break because why market took about the last high, and then they be expecting to do what to buy maybe off a demand zone or whatever at this spot, and then eventually the market does this. The market does what? Takes them out, and this now becomes what? This run up becomes what? A liquidation, right? So possibly the smart money do what? Smart money do what? They liquidated this last point and possibly this high to do what? To continue to do what? Distributing price down. So this happens a lot. So this has brought an issue. How should we? When should you know that market has actually broken structure? When should we consider a break of structure as sometimes high probability? Because this happens a lot. And you're looking at the market, expecting that it should hold here because what you saw was a break of this last lower high, right? So and the market eventually does not do that. It eventually takes you out and continue what is sell downwards, right? So now we want to look at the three things that you should look at to actually know if you should be considering this as a break of structure or not. So basically three things to look at when you're considering a break of structure. The first thing you want to see, either any of the right, it could be any of them. The first thing you want to see what a run of a previous high or low. That's the first one to see. Second one to see, I want to see what a mitigation of an imbalance. And the third thing I want to see, it could be any of them, right? Or what? Mitigation of another block, right? Mitigation of an order block, right? Or you can say return to an order block. You can put in brackets return to an order block, right? So it depends on, these are the three things you want to see. Any of these three basic things actually constitute what would likely look like a break or structure. So we want to see price run above a previous high or a low. Want to see price mitigate an imbalance, or want to see price what mitigate order block, right, or return to an order block, right? So the first example is that on the higher time frame, maybe you see the price, want to see maybe so price something like this, market is kind of bearish, and the market takes out this low, right? Now, when market takes out this low, then if you should find maybe let's assume that this is the 4 hour. I want you guys to understand what I'm talking about. If I go into chart, so instead of this is a 4 hour chart, right? This happened on the 4 hour, right? This is a 4 hour chart. No, this is a 4 hour chart, right? Let me make this a bit bigger than that. Let's make this bigger so you guys can see it. All right, so this is a 4 hour chart now. So now, inside this region, inside there, right? Inside this low, right? Below this low, you happen to see this on the 15 minutes, or you happen to see something like this. You happen to see market, sorry, so you happen to see the market do something like this. and give what a break of structure, right? So this is now what you can look at what as your break of. You cannot be considering this as what a break of structure. Why? Because it happened was after what the previous low was run through, right? So this is actually what I consider when I want to look at if the market has actually broken structure. Remember that a break of structure is actually what a signal to do what to get into a trade, right? So when market does this, you are looking for what the market to do what to likely buy up to the high, all right, or maybe 50% of the high, right? So on the 15 minutes time frame, you cannot look at maybe this to happen, or quite. Are you getting the gist? So the gist is that you consider break of loss when number one, either this happens, price runs a previous low and then gives you what that break or some maybe on the double time frame, or could be on 1 hour, it could even be on the same time frame, right? So when you see this break where below was this previous low, right? And the reverse is for a buy scenario, right? So when I'm talking about that, I'm referring to this. So the market is what bullish, right? It takes out what this previous high, and then what you see, you now see something like this, you kind of break or so what above what this previous high. So this is what I look at what I consider what as a break or structure, right? So that's the first scenario, right? Now, still talking about this, there are scenarios in which the markets can do something like this. The markets can maybe you're bearish, the markets come and liquidates this high, and then just immediately after liquidating this high, you see this occur just above this previous high again. You now see this occur, right? See the same thing happen above this previous high. Let's say the market do what? Break to the downside, right? So the market was poised. Maybe there was let's assume that there was a kind of imbalance at this point. There was something, a kind of point of interest at this point here. And the market came and hit something just above this high right here, right? There was something above this high here. The market came and hit that zone. And then what did I say in 15 minutes? That's what a break of what structure. So this is what we call a break of structure, right? So now this is what validates what this break of structure using the concept of what the run of a previous high or a previous low, right? So that the things you're looking at, if you want to know if market has actually broken structure for it was to get into the trade. And remember that you're looking at for what the counter move. So if you see a BS for this, you're looking to sell, and below you're looking to do what's buy, right? So these are the two things I'm looking at for. So it has to happen either this way or below the low, depending on what the high time frame is saying. So if the market is seriously bearish, they're looking for this kind of run of previous high and then what a BOS, right? And also that applies to what a bullish scenario. So market does what run this low, comes and does what gives what a break or so what below what that's low. I was what you are looking at for. This is all you're looking at for. This I don't know why it's not appearing straight. Okay. This is all you're looking at for, just this on the 15 minutes. Maybe if it's a 4 hour time frame, market comes below this previous 4 hour, maybe it hits an imbalance on order block below this low and then gives what this. This is what we call a run of what a previous high or a previous low. I hope you get the point. Now, the second scenario you're looking at for a BUS is when markets comes to what an imbalance. So imbalance is simply what the distance between three candles. You know, if you have three candles, so if it's the first candle, you have a second candle, right? And then you have your third candle, right? So the imbalance just simply what the distance. Oh my God, what have I done? So you have your third candle, sorry. You have your third candle here. All right, I think I should make this a bit smaller so that there can be space. All right. So what about the size of the candle? So let's assume that this candle created a wick at this point. Maybe you have a wick here. All right, maybe you have a kind of wick at this point here. And then you have another wick down here. So if it's not perfect, so I'm sorry about that. And then you have another wick to this point. And then you have another wick here, right? So this is your imbalance. The distance between what this week and this week, what price was not what efficiently delivered there. So that gives you what your imbalance. And if I'm getting my imbalance to, so this time becomes your imbalance here, the distance between this and this. So this is an imbalance, right? So it's also the same thing for a buy. So the distance between candle, the week of candle one and candle three. You have candle 1, 2, 3, right? So this candle one, this candle 2, and this candle 3. So that's what we're looking at for. That's what we call an imbalance, right? So I'll just use a ray chart to illustrate what an imbalance is, right? So just let us quickly go to a 4 hour time frame. Right, so you guys can start talking about. So quickly 4 hour time frame. So so since an imbalance here, you can see that in between this distance, you can see that between this week and this week, there's really a distance there. That's your imbalance, right? So that's what I'm talking about, imbalance, right? So that's what you're looking at for. You can see another imbalance at this point here. Sorry. You can see another imbalance at this point here, right? So you can see this. That's an imbalance as well. So you're measuring the weeks, right? The distance between this so there's the imbalance, right? So I hope you get that. So let's go back to where we were. All right. So now when you have understood that, remember you're looking at for what? A mitigation and imbalance. So that simply means is that if the market is poised to go lower, maybe the market is bearish, right? And then it's market, do this. And maybe you have an imbalance here. So you want to look out for what? A break or so where when the market comes towards that higher time frame, what imbalance, right? So this becomes the area looking for what for a break of structure. So you have precise areas you're looking for what a break of structure, not just any random place, right? So this way you're looking for a break of structure inside what this imbalance, right? Inside the imbalance. That's what you're looking for what a break of structure. So let's assume this is a 4 hour time frame, maybe an 8 hour time frame. Right? Let's assume this is an 8 hour time frame. And this is an 8 hour time frame, and the market comes into that area, and then maybe on the 15 minutes, you know, see price do this, gives us that break, right? That break of structure, right? Inside the 15 minutes chart, inside the same balance. So when you see this, you can classify this as what? Your break of structure. Also, I'm looking at for, right? So 15 minutes, this is how I look at break of structure. Let's see it happen at significant area. So you want to use an imbalance to justify what your break of structure. Either imbalance, run off a previous high or low, and then the final one, which is what a mitigation of what an order block, right? So that simply means that when price comes to the last up candle before it, that means the market is maybe the market is buying, and then the market now sells off from this point, right? This is also the 4 hour time frame, right? So this is your 4 hour time frame. So this is your 4 hour time frame, right? So when the market comes to that last up candle, right? So the other block is that last up candle or the last up move before was the break to the downside. So much they call it supply and demand. You see up to you call it supply and demand. So this area is looking for what your break of structure. So you can look at the market to come to that point on the 15 minutes time frame. The market comes here on the 15 minutes. They can look for what your break of structure. This is top down analysis now. So on the 15 minutes chart, the market comes to that other block on the higher time frame. They look out for what your break. The market will do something like this: high, low, high, and then it break. So this is what they're looking at for. Looking for this kind of break inside what a 4 hour point. I hope this is clear. You are looking at for BOS inside specific regions, either a run of a previous high or low, depends on your bias, indication of an imbalance or what, indication of what an order block. Right, so the three things I'm looking at for, and the reverse is for a bullish scenario. So markets break structure on the 4 hour and then comes to what that area, and then you now see this on the lower time frame. This is what we call what a break of structure, right? This is what I'm considering what as a break of structure, right? So the purpose is for you to make your entries, right? So I consider as a break of structure, right? Either this area, either other block, right? So this could also be 4 hour, and this could be so maybe weekly. So it depends on the time frame looking at for. So this could be a weekly time frame now, a weekly, and you look for what your BOS on the 4 hour. So market comes to the weekly order block, and then you see what a BOS on the 4 hour. So these are the three things you're looking at for to classify what your break of structure, right? If these things don't happen, then you're not interested. And I think I just add a bonus. So let's add a bonus key levels. I don't really use this, so you can also add key levels, right? Higher time frame key levels, or not at higher time frame key levels. And so what I mean here is classic support and resistance. So I'm talking about classic support and resistance. So it happens as well. So it can also be a kind of example. I don't really use this, but you can also use that. So what I mean is that let's assume that the market is poised to go higher, right? You have a kind of support zone, market gives a kind of support here and then breaks above, right? So now this area becomes what is support level on the higher time. This is a 4 hour chart as well. So market comes to that point and the market now drops to that area, that high. This is what we call, you now looking for what on the 50 on the lower time frame that is lower than this, can look for what the break of structure, right? So when we see price do what break the last swing high. So this was called a break of structure. Market taker was this last swing high inside there. So this could not be your 15 minutes chart. This could not be your 15 minutes chart. And then the area to the left cannot be what your maybe 6 hour time frame, right? But let us use 4 hour. Let us be consistent, right? So it could be a 4 hour, next a 15 minutes chart. So we want to see this happen. This is what we call a break of structure. So you're looking at these four basic things to classify what a break of structure. Now let's ask now. It's not important if the markets break structure with a wick or the body. It doesn't really matter. What matters is I'm going to say displacement. What do I mean? I'm not talking about this kind of break. The market will do something like very tiny break and then start to rush below because you could like take it out. So I'm not talking about this. I'm talking about it's strong. The market does this, takes out a high very clearly. I want to see market displace this high clearly, not just one little push up and then you now say it's a BOS. No, you want to see market, you want to see energy, you want to see the market energetically what push through the high. That was classified as your BOS. So it could be the weak, it could be the body. Even if it's the weak, when the market was weak very clearly above that high, and then remain there a bit. You don't want to see price just start to drop immediately. You want to see price take off the high and then remain there for a bit before the was coming back down to do what give you entry, right? So we now look at for this the last area for what your point of interest, right? So this that becomes the area of interest to do what to take your buy, right? So I now look for what buy entries and then know what take price was higher, all right? So we want to see price energetically will displace the high, and for a sell case scenario, we want to see price what energetically was um, displace the low, right? Once the price energetically will displace this last low, then can I count it as was a break of structure? Not just the market will just come and just weak through and maybe close below. It doesn't really matter, even if it's a close or a weak. Once the market was clear this liquidity clearly, brush this high very clearly, and then that is what I call a break of structure. That's what I classify as a BOS. It has to be very clear, a very clear push above the last high or last low, depending on what direction you're looking at, right? And then can I classify that as what? A break of structure, right? So just typically, when markets break structure, it's typically start to go the opposite direction. If market is bearish and then it gives that break, right? If you see that break, that's displacing break. If you see that displacing break, the market should do what? You should start doing what? Going higher, right? So the market should start doing what? Going higher, right? So what you expect, right? When the market does this, so you want to look for a bias, or so we're looking for that. So now let's look at just one example of each chart and then we call it a day. This video I don't want to be too lengthy. Let's just go to a 4 hour of this particular chart and then we look for examples on that, right? So now let us look at this example. Looking for one that is very close. I don't have to go too far. All right. All right. Look at this. So you can see that the market was trading low. What happened? It went below this old low, right? So you can see that all these lows are captured. So look at these lows here. All these lows have been done what? They have been captured. Like I said, how market went below all this old low. You can see all this liquidity resting here. That price went below it. So inside there, you can look for what? A break of structure to do a take price was higher. Right. So let's look at the 15 minutes time frame now to see there was actually a break. You can see very clearly here. What can you see here? So below that old low, what do you see? What can you see? The market take it out. So it doesn't really matter if it's the body or not. So if you're using by the body, let us check something. So if you're using by the body, there was actually a break. Sorry. There was actually a body to body break here. He closed above and also a week to week. But what happened? What the market was? You can say the market did was it cleared the high very clearly. It displaced, look at it went about 160, about 40 pips above that high before then was coming back to return for what for your buys. So this is what I'm looking at. I'm looking for what price it was to displace that previous high. That give me what my break of structure, and then I'm looking for what buy opportunity. Maybe I don't know, maybe this other block or something like that. So then you look for your buys, and that is it. It's very easy, very easy. When you do your top-down analysis, these things become very easy to spot. All right. So let's look for the last example and then we wrap it up. All right. So let's look at for this area. Let's look at this. All right. So let's look at this area now. The market. Let's look at before all this happened. Right. Before all this happened. Right. Let's look at this area. This sort of happened. Now let's look at an imbalance scenario. So I had an imbalance resting here. So there's an imbalance here. There's an imbalance that was resting here. Right. An imbalance here. And what the market did was it's get that 4 hour break here, and a kind of break of so here. All right, so we came to that imbalance for ourselves, right? So there's a kind of POS here. There was liquidity below. So let us see there's actually an entry here. Let's go to the 15 minutes time frame. See there's an entry at that area there. All right, so let's look at that point where we had that break. That's the point I highlighted, right? So let me see if I can quickly see if I can see it. Then we okay. This is it. So this is the area I was looking at. So you can see that area I was looking at. This is the imbalance region right here, right? This is the imbalance region. So you can see that totally a break. So market did what? It's broke here. It was totally a break also here, right? There was a break here. What happened? Market did what? It broke below and then came to retest this this um uh this key level. You can see actually a key level here. So it's actually kind of key level at this point, at this old low prior to this break. That was a kind of a classic support resistance idea, right? So that's already kind of a level here. The market broke, came to retest this low, and then spiked down. So that was how this happened, right? I don't know why this is not coming out. Let me use this. So this was actually the support resistance line. Market broke below. Because the market opened there, came back, tested this high, and then it dropped. There was no imbalance in the field there. That's why market did not come up a bit. So if you shorted there, stop loss maybe above this swing high, maybe here. So if you shorted there, very beautiful trade. So if you took a short position, the market came to the test there. If you took a stop loss a bit above this swing high there, that have been a very amazing one. Markets really pushed down a lot, all right? It really pushed down a lot. So you can see how this was actually a one is to two trade, right? So one is to two. The deliver one is to about one is to two or that about. So that would have been very beautiful, right? Although I wouldn't have taken this. So but that was actually a very good example. But at least if you're very profitable, you can use one is to one, right? So markets came, this is our one is to one, somewhere around there, one is to one. Still something, right? So this is basically how I look at break construction, right? I want to see higher time frame support. Then I use my lower time frame to do what? To look for confirmation, right? So this video was insightful. Do well to subscribe. And also we have our paid mentorship program where we talk about all these concepts and break it down for better understanding, right? So if you want to join our mentorship program, just use the link in the description to join with the seller link, or you join by contacting me directly, right? If you want to do a direct bank transfer, but if you want to just use the link, just swap your credit card and then use the link in the description to join, right? So I hope this video was insightful. See you guys when I see you guys. Do it to like this video, share it with your friends, and I will see you guys in the next episode.